Hello, soldiers. We are in the topic accounting for branches. This topic we are going to deal along with an accounting standard, which is AS11 accounting for, effects of changes in foreign exchange rates. So basically, both are two different topics. Then why we are dealing simultaneously due to a common topic, which is foreign branches. The topic foreign branches is form part of branch accounts as well as AS11. So that's why while dealing branch accounts, I will deal all issues except foreign branches. We are covering foreign branches along with AS11. That is the reason why we are take up AS11 along with accounting for branches. Apart from that, there is no relation and nothing is great here to combine both the topics. Okay, apart from all such things, so let us directly entering into the topic with introduction. Before seeing the accounting aspects, let us start our journey with the meaning of branch. Sir, what exactly the meaning of branch? Or before seeing the meaning of branch itself, why the term branches are in generally used in case of business enterprises? You know, any business organization objective is to satisfy their customers and getting the huge profits out of their business activities. So if we are conducting our business activities by stick on to a single place, then we may not serve more customers, or the services offered to the customers are not at par with the market due to the distance in between business organization as well as customer, or maybe due to some other issues, manufacturing activities and the cost impacted issues. Such all things may impact. Such all things may impact for conducting the business activities at various locations due to the various issues. Now, I cannot put a single act here due to various issues. So that means if any business enterprises, if they want ultimately customer satisfaction and if they want to enhance their business as well, in the sense of expansion, okay, so definitely they should start their business activities by scattering into different locations as well to grab the new customers. Am I right, guys? So with that, the concept of branch is evolved in case of the business enterprises. But whenever we can talk about a branch, automatically another word is also coming into our mind, which is head office. Which is head office. Without the presence of head office, the presence of branch is invisible. Sir, then what is the difference between head office and branch, sir? An enterprise which conducted the business activities by choosing the main location, and it will control all other locations. The main location is known as head office and all other locations is known as branch. With from that concept only, now we are defining the branch. Sir, branch is an establishment, which is an establishment. But the location of that establishment is altogether different from head office location. So branch is an establishment which is located different from head office. So branch is an establishment which is located different from head office. That's it. Such a simple definition we can tell about the branch. Now, sir, coming to the accounting issues, or coming to the accounting perspective, for the purpose of providing accounting treatment of that branch, for the purpose of providing accounting treatment of that branch, branches are broadly classified into two types. Branches are broadly classified into two types. Those are inland branches and foreign branches. How many types of branches, guys? In case of accounting perspective, those are classified into inland branches and the other type is foreign branches. This is for accounting perspective, accounting purpose. Accounting purpose means to provide accounting treatment of that establishment, to provide accounting treatment of that particular branch. And one more thing, guys, it is too early to discuss the accounting issue as well. In between, just I want to differentiate this topic with departmental accounts. You know, you already come across with the topic departmental accounts. Why in generally we are going to, or we are in generally conduct the departmental accounts, or what is the main objective of the departmental accounts? Ultimately to know each and every specific department profit or loss. Am I right or wrong? Here also, what is the objective of a specific branch, sir? Or what is the objective of this branch account, sir? Knowing profit or loss of that branch, along with that knowing the financial information of that branch. Financial information means that includes both profit or loss along with the financial position of that branch, that is knowing the assets and liabilities of that particular branch. Not only that, including all the branches and along with the head office, what is the performance of that entire entity, as well as what is the financial position of that particular entity also we are try to know through this chapter. Next, how the branch is different from the department, sir. Whenever you are calling a particular establishment as a branch, which should need to be located altogether different from head office. Am I right? But in case of the department, if you've seen, which is a division of a large establishment, or which is a division of a giant entity, which conduct the activities altogether different from the other department. That means the department and the establishment both are in a single location only in case of departmental accounts. But coming to the branch accounts, and the branch and head office is altogether presented in two different locations. And one more thing, in case of the departmental accounts, one department will conduct activities different from the other department. Maybe the department A deals with a certain product, department B deals with another product, or maybe department X is dealing with accounting issues and a department Y is dealing with altogether trading issues. Maybe like that, two different activities are conducted in case of the departmental accounts. But in case of the branch accounts, the branch is conducting the activities more or less as equal to the head office. I mean, both head office and branch, both are in the same line of business activities only. Am I right? For example, if the head office is in the education industry, then the branch will also offer their services in the education industry. If I can take up, coming to the banking companies, you know, so you know the SBI, the State Bank of India, which is a popular public bank in the Indian economy, their head office is located in Mumbai. It have altogether their branches throughout the India, I think so, which is more than 10,000 plus. I'm telling the approximate figure, which is more than 10,000 plus. Okay. So that means all these branches are conducting the same line of business activity as like head office only. But in case of departmental accounts, it is altogether different. And the objective of the departmental account is knowing profit or loss of that each and every specific department to know the department performance. But here the objective of the branches is not only knowing the performance of each and every branch, but also knowing the financial position of that specific branch. Hope you understand the difference between branch accounts as well as departmental accounts. We will see once again through our material each and every corner. But as a formal introduction, just I defined the branch and how it is different from the department also I explained. Okay. Now I already introduced the classification of branches. For accounting purpose, branches are broadly categorized into two types. One is inland branches, another one is foreign branches. Okay. This is purely for the purpose of accounting perspective. Sir, what is the meaning of inland branch and what is the meaning of foreign branch, sir? Inland branch means both branch and head office is located in a single country. Head office and branch located in same country. Then such branches are known as inland branches. Simply, the location of the branch is the country in which head office is located. Then such branch is known as inland branch. Do you understand? But the place or the presence of their business activities is altogether at different places. Within the country also, the presence is at different places. That is different story. Now coming to the foreign branch, branch is located in the country other than head office is located. Branch is located in the country other than head office is located. That means if head office is located in India, then the branch is located in US. If the head office is located in UK, then the branch is located in India. Then such branches we can call it as a foreign branches. Simply head office should be located in one country and branch is located in another country. So this foreign branches topic, I told you already, we are going to deal along with the chapter that is AS11, along with the standard AS11. So right now, I will not talk about any single word. Right now, I don't want to talk about any single word regarding the foreign branches. We are going to deal entire the topic of foreign branches along with AS11. Okay. Now coming to inland branches are again divided into two types for accounting purpose only. For accounting purpose only, inland branches are again divided into two types. That is dependent branches, and another type is independent branches. Dependent branches, independent branches. Sir, before discussing all these issues in your mind, you should end up with one thing. What is that? The objective of the branch accounts is simply knowing each and every specific branch performance, that is profit or loss, and the financial position of that specific branch, that is knowing assets and liabilities of that branch. Apart from that, financial position and performance of the business entity as a whole, that is head office plus all branches performance is how much, and head office plus all branches financial position, how it look like. That is the objective, right? With that objective, for the purpose of accounting treatment, branches are broadly classified into two types: inland branches and foreign branches. Inland branch is nothing but the branch is located in the country in which head office is located. In case of foreign branch is located in the country other than the head office is located. Now, inland branches are again divided into two types: dependent branches and independent branches. Now, sir, how we know a branch is a dependent branch or a branch is an independent branch, or what is the meaning of dependent branch or independent branch? Concentrate, guys. Sir, dependent branch is a branch, the entire branch accounts are maintained by head office only. To speak technically, dependent branch, the branch books are maintained by head office only. So first I will tell you the technical definition directly. Then I will tell you the layman approach. What the layman definition or the layman meaning of the dependent branches. So in case of the dependent branches, branch books maintained by head office only. Coming to the independent branches, here branch books maintained by branches only. Maintained by branches only. That is the difference between dependent branches and independent branches technically. But for understanding purpose, sir, what exactly the meaning of dependent branches, sir? Dependent branches is not having any decision making authority. The entire decision making is completely in the hands of the head office only. The branch should act according to the suggestions or the terms and conditions levied by the head office. Or a branch is established only for the purpose of taking orders from that place, but the order is ultimately executed by head office. Then the branch is a dependent branch. Sir, the branch is only established to collect cash from the customers, but the entire services are offered by the head office only. A branch is established in such place only for the purpose of providing raw material to the head office, because raw material availability is there only in that location. So, but ultimately the manufacturing and all other activities is conducted by the head office only. Do you understand in which scenario a branch is said to be dependent branch? The dependent branches are not having any authorizations, or not having any authority on their own. Simply they should act according to the terms and conditions levied by the head office. Then such branches are known as dependent branches. But in case of independent branches, not like that. As like head office, how they are performing all their activities individually, branches are also going to conduct all their operations on their own. They are having their own separate decision making power. They are having their own customers. They are having their own purchases along from the goods which are sent by the head office to the branch. That means they are totally independent from the head office. They can have their own bank accounts. They can have their own customers. They can have their own purchases. Everything is possible as like in case of head office only. But most of the cases, when head office will go for dependent branches, most of the cases head office will go for dependent branches only for the purpose of procurement of raw material, for the purpose of execution of orders. Okay, so if it wants to take the less interface or the very less interaction to that branch, then such branch is in generally they can adopted as a dependent branches. But when they can evolve, when an head office want to establish independent branches, if the place where the independent branch is located is altogether very far away from the head office, and there also customer loyalty is high, and that independent branch have the authority as like the head office, they can execute top to bottom as like head office, then the head office is willing to establish an independent branch in that location. So that is the thing in generally in outside business, when when dependent branches and independent branches are established by head office, just now I discussed. But coming to the accounting perspective, when a branch is said to be dependent branch, if the branch books are ultimately maintained by head office only, then such branch is known as dependent branch. But when a branch is said to be independent branch, if such branch books are maintained by branches only, then such branches are known as independent branches. Now you can simply understand why in case of dependent branches, head office is only maintaining the branch books itself. Anyway, head office will maintain their own books of accounts. That is okay. Each and every entity will maintain their own books of accounts, right? Now I am only talking about branch. I never discussed any point things related to head office. Sir, what is the accounting treatment with respect to the head office, sir? The general accounting treatment, if it is a other than a company, if it is a sole proprietor or a partnership firm, the general accepted accounting principles are applicable. If it is a company, Companies Act 2013 provisions needs to be applicable with respect to the head office for the preparation of financial statements I am talking. Now coming to the branch, if the branch is a dependent branch, then such branch accounts are never maintained by the such branch. Such branch accounts are maintained by whom? Head office. But if the branch is the independent branch, then such branch accounts are maintained by whom? Branch itself. Now, to know profit or loss, that is performance of the branch. Anyway, sir, branch books are maintained by head office only in case of dependent branches, means the entire branch books and head office books are within the same books of accounts, are within the head office hands only. Now, to know profit or loss achieved from each and every individual branch, to know profit or loss evaluation by each and every branch, head office will maintain branch books in three different methods. In any method is possible, any method they can maintain, in any method they can achieve such branch profit or loss under dependent branches. These are different methods. These are different methods. What are such different methods of maintaining books of accounts in case of dependent branches, sir? The first method is known as debtors method, which is known as debtors method. And another method is stock and debtors method. Stock and debtors method. And another method, which is the last method, is final accounts method, which is known as final accounts method. Actually, I need to tell one more thing. Before explaining this, actually, I need to tell one more thing. What is that? When these methods are possible, if head office send goods to the branch at cost or invoice price, then only these methods are applicable. If head office send goods to the branches at cost or at cost plus profit, that is nothing but invoice price, then only these methods are applicable. I mean, sir, if head office send goods to the branch at other than cost or cost plus profit, these methods are not applicable. Yes, these methods are not applicable. I mean, if head office send goods to the branches at a wholesale prices, then wholesale price method is applicable. Okay, I'll construct this diagram in better manner. Just give some time space to me. I'll rub this. Just a second. So I'll add such things as well. 1 second. What is that? So if goods are sent by head office to the branch, goods sent by head office to branch at cost price or invoice price. Invoice price means cost plus by adding certain profit. Then three methods are applicable. If such goods are sent by head office to the branch at the rate of wholesale price, then only one method is applicable, which is known as wholesale price method. What are such three methods? Just now I discussed here in this case. These three methods just now we discussed, that is, discussed means just I told the names of such methods, that is debtors method, and another one is token debtors method, the last one is final accounts method. Am I right, guys? So if goods are sent by head office to the branch at the rate of wholesale price, then the method we should need to be adopted is wholesale price method. The method itself is wholesale price method. So in this instance, we are not talking anything about independent branches. There is a separate discussion, which is very a huge topic. We are going to discuss independent branches at later stages. Now, again, come back all of you. So we started our journey by discussing different types of branches in accounting perspective, that is inland branches and foreign branches. So inland branches means head office and branch both are located at the same country, and in case of foreign branches, head office is located at one country and branch is located at another country. So foreign branches topic we are going to deal along with AS11. Now coming to inland branches, so branches are divided into two categories: dependent branches and independent branches. So when a branch is categorized into dependent branch, when a branch is categorized into independent branch. If branch books are maintained by head office itself, then such branch is generally known as dependent branch. Then when a branch is said to be independent branch, if branch books are maintained by branches itself, then which are known as independent branches. But in pictorial way, if I want to tell, I mean in the common way, if I want to tell, dependent branches are those branches which completely depending on head office for decision making process. They are not authorized to take any decisions in generally or commonly when head office is go for dependent branches to procure certain raw material or to take the orders from the customers or to do certain activities as per the information given by the head office, nothing else. That means the activities made by the branches are very much less. The actual business is in the hands of the head office, as well as decision making parts are also is in the hands of head office only. Now coming to such dependent branches, to know profit or loss of that specific branch, various methods are available with the head office, because who maintain the books of accounts? Head office itself maintain the books of accounts in case of dependent branches. If head office send goods to the branch at a cost or invoice price, then the methods are, you can use either debtors method or stock in debtors method or final accounts method. But if the goods are sent by head office to the branch at wholesale price, then head office will use wholesale price method to ascertain the profit or loss of that particular branch. Hope you understand till now without having any confusion. So when goods are sent by head office to the branch at cost or invoice price, whatever the method you are using, the objective is same: knowing profit or loss of the specific branch. In case of wholesale price method, I mean when goods are sent by head office to branch at the rate of wholesale price, again the objective is same: knowing profit or loss of that specific branch. Fine. Now first let me discuss each and every method individually. Please consider all of you. First I'm talking about debtors method. Let us start with debtors method. Sir, this session may be a little bit lengthy. The reason is, if I will discuss all such methods in a single session, then only you can differentiate how one method is different from others. So otherwise you have a lot of confusion while resolving the problems as well. So please all of you allow me to discuss all such methods at this stage itself. Now the method is debtors method. you should remember one thing first. Whatever the method I'm explaining, whether it is debtors, stock and debtors, or final accounts method, or wholesale price method, all these methods are applicable to which type of branches? Dependent branches. In case of dependent branches, branch accounts are maintained by whom? Head office itself. Okay. In case of debtors method, head office will open a branch account to know the branch profit or loss. In case of debtors method, to ascertain profit or loss of a specific branch, head office will maintain that specific branch account. For example, if the head office is located in Delhi, a branch is located in Hyderabad, and another branch is located in Vizag, and another branch is located in Chennai. Then to ascertain each and every branch performance, head office will open total 3 different branch accounts. One is Hyderabad branch account, another one is Vizag branch account, and another one is Chennai branch account. Do you understand? Okay. Now let me open such branch account here. Let me open such branch account here. This is the branch account. Right. Sir, for some time period, let me deviate from this chapter branch accounts. Now, I want to explain a concept of incompleted records. So, till not at the chapter incompleted records over for you, I know, but still we can able to discuss the topic, a small topic of incomplete records, and I want to connect with this debtors method. Please, all of you concentrate here. Uh, so the topic name is incomplete records, right? Which is actually our next chapter, incomplete records. You know, a brief view just I want to give regarding this topic at the chapter. In case of incomplete records, what happened? The books of accounts are not completed 100%, not completed 100%. I mean, maybe certain information is missing. There are no proper expenses. Incomes information is maintained by the particular entity. From such books of accounts, we need to ascertain the profit or loss of that particular period. We should need to ascertain. So, in case of incomplete records, if nothing is given with respect to revenue expenses and revenue income, then how to ascertain profit or loss of that particular entity for that particular year, we can see in the chapter. So that method now I'm going to explain. The method is known as statement of affairs method, which we are going to try to cover in the next chapter, but it is too early to discuss, I know. But still, there is a link in between incomplete records chapter and this debtors method. That's why I am going to explain this concept right now itself. Concentrate, guys. The method name itself is statement of affairs method. 1 second. So the method name is statement of affairs method. Sir, you may have a doubt that without knowing incomes or expenses, how we can able to ascertain profit or loss, sir? That is very simple. A simple logic I will tell you. Let us assume a sole proprietor introduced the capital of 1 lakh initially. Let us assume initially he introduced 1 lakh capital, which is opening capital. Opening capital. For year end, if I check, the closing capital is it's like let us assume 1,20,000. The closing capital is 1,20,000. So then, for knowing current year profit or loss, No need to check about each and every expenses and each and every income component. We can simply conclude that current year profit is 20,000 without knowing any income and expenditure. Because how the opening capital will become the closing capital as 20,000? If in the current year, if you get the profit of 20,000, then the closing capital will become 1,20,000. That means simply by comparing the closing capital and opening capital, we can simply calculate profit or loss of that particular period. Do you agree, all of you? For example, you may ask one doubt that, sir, simply how you can thought that 20,000 is the profit, sir? Maybe in the current year, anything capital is further introduced, which is a further introduction of capital. Let us assume there is a further introduction of capital is there. Further introduction of capital. That is additional capital during the year. Additional capital. Sir, additional capital is there, sir, for to the extent of 5,000. Then current year profit is how much? In that instance, if additional capital 5,000 is there, then the current year profit is 15,000. The balancing figure is 15,000 at that particular scenario. Am I right? Sir, no, sir. In the current year, drawings are also there, sir. In the current year, drawings are also there. Let us assume current year drawings, because due to the drawings, capital is going to decrease, right? Let us assume the current year drawings to the extent of 25,000. That means opening capital 1 lakh plus additional capital 5,000, 1 lakh 5,000 minus drawings, that is 1 lakh 5,000 minus 25,000. Then the closing capital should need to be equal to 80,000. If I made it, it should need to be equal to 80,000. But the actual closing capital is how much? 1,20,000. Then what is such difference? Again, such difference is profit for the current period. Again, such difference is profit for the current period. I mean, without knowing any expense or income of that particular period, can we able to ascertain profit or loss, sir? Yes, it is possible. That method is particularly known as statement of affairs. The method with the figures, what I explained, the same thing I'm going to explain in a technical mode. Please all of you concentrate here. I'll start with closing capital. I'll start with closing capital. Is it okay, guys? Add drawings minus additional capital minus opening capital then we will get the balancing figure as profit or loss of that particular period, which in generally we are followed under the statement of affairs method. Then the component what we get is technically known as profit or loss of that particular period. Now the reverse, in the reverse manner, just I made this pro forma: closing capital, add drawings, minus additional capital, minus opening capital. Then I got this balancing figure of profit or loss. If you want, you can put those figures here. Closing capital is how much? 1,20,000, right? Plus drawings is how much? 25,000. Minus additional capital is how much? 5,000. Minus opening capital is how much? 1 lakh. Then 1,45,000 minus 5, 1,40,000, 1,40,000 minus 1 lakh, which is nothing but 40,000 profit. Here also the difference of profit, how much we got, which is 40,000, which exactly equal. So which is the pro forma we are in generally following in case of incomplete records to know profit or loss of a particular entity regarding a particular period if the entire revenue expenses and revenue income information is missing. You may ask a question that, sir, why this method you are known as statement of affairs method, sir? To know the closing capital, how we are going to adopt the closing capital is the difference between closing assets minus closing liabilities. Closing assets minus closing liabilities. So the closing assets minus closing liabilities we are going to prepare through a statement of affairs, as it is look like a balance sheet, but we are in generally not call it as a balance sheet, which is the difference between assets and liabilities. Sir, in very layman approach, I'm explaining this because the discussion we are going to made in the chapter incomplete records is very huge. The in detail discussion we are going to made regarding this topic also. So that's why in very basic manner I'm going to explain. So the difference between closing assets and closing liabilities, we can call it as closing capital. In the same way, opening capital is the difference between opening assets and opening liabilities, outside liabilities. Then we will get opening capital. These assets and liabilities we are going to present through a statement of affairs as like balance sheet. Then the balancing figure we are deriving as closing capital. And with the opening assets and opening liabilities, if you make it present a statement of affairs, then we are getting a balancing figure of opening capital. If you know the closing capital and opening capital and current year drawings and additional capital, then you can easily ascertain the current year profit or loss without knowing any income or expenditure of that particular entity related to that particular period. Now the same logic I am going to apply in case of debtors method. Please all of you concentrate. So the basic rule of the debtors method is head office is going to record transactions entered in between head office and branch only. Head office will not record any transaction occurred in between branch and the outsider party. One more time, I'm explaining this point. This is very much important. I'm writing this as well. Please concentrate. The basic rule of the debtors method is head office is going to record transactions occurred in between head office and branch only. Head office and branch only. It will not record any transaction occurred in between head office and outsider. Head office and outsider, it will not record at all. Why, sir? Sir, if for example, branch made a sale, sir, branch made a sales to the outside party, but if you are not recording such sales, then how I can able to ascertain profit or loss, sir? In case of incomplete records, in case of statement of affairs method, do you calculating the total sales made by such enterprise for that particular period? Not at all. But even though without knowing sales and purchases and other expenses, do you deriving the profit or loss? The same logic, even though we are not recording the transactions in between head office and outsider, still we can able to ascertain profit or loss. Even though if you can miss out some of the transactions of the branch, still you can able to ascertain the profit or loss of such particular branch accurately by comparing closing capital and opening capital. Then, sir, how we can compare that process? The same thing what we adopted, closing capital plus drawings minus additional capital minus opening capital, then we are getting profit or loss, right? The same thing I am proving through this debtors method by preparing the branch account. Now please all of you concentrate here. Sir, this branch account is going to start with opening balance. That is, opening balance is just a second. Opening balance. In such opening balance, we may have opening balance of assets like stock. We may have cash, opening cash, or we may have debtors. Okay, or we may have any other asset, guys, any other asset. There is no differentiation for me, which are opening balance. In the same way, we are also having closing balance of assets. Closing balance of assets. All these are opening balance of assets. These are opening balance of assets. This is closing balance of assets as well. The same, what are such assets? Stock, cash, debtors, any other asset, any other asset, as your wish. Now, please consider all of you. How the opening balance of assets we have, in the same way, we have opening balance of liabilities as well. If anything are there, opening balance of liabilities, if anything are there, then we may record. In the same way, we have closing balance of liabilities we have. So first, please all of you listen me. Then how this pro forma is working, I'll connect with the debtors method. Then you can easily, then I will connect with the statement of affairs method. Then you can easily appreciate the entire debtors method itself. Okay, next. Okay, so just let me give some space. Let me write down here. Closing balance of liabilities. Fine. Sir, after this, what I should need to write, sir? If goods are sent by head office to the branch, then we are need to be record na. In case of debtors method, transaction entered in between head office and branch only we are going to record. Any transactions entered in between head office and outsider we are not going to record. Sir, if goods sent by branch to the head office, then what is the journal entry, sir? The journal entry is branch account debtor to goods sent to branch account. To goods sent to branch account. Because who is preparing this branch account is ultimately head office is only preparing. Head office sent goods to the branch, then the entry is branch account data to goods sent to branch account. In shortcut, generally we are call it as to GSB account. If the same goods, suppose branch return to the head office, maybe due to not meeting the quality, or maybe due to the unnecessary goods sent by the head office to the branch, due to the any reason, if any goods are returned by branch to the outsiders, then I should need to return, that is, I should need to reverse by GSB. These are goods returned by branch to head office. Sir, why we need to record like this? Please give some time space to me. I will explain each and everything. Okay. Next. Sir, the branch is a completely an independent branch. Everything will be done by the head office only. To incur any expenses by the branch, if head office send any cash to the branch, then as like how you are sending goods to the branch, in the same way you should needs to send cash to the branch to incur such expenses. At that particular point of time, you should need to write the entry to cash, which is cash sent. Now, ultimately branch sold the goods to their customers and they may incur certain expenses out of the cash sent by the head office. Then the remaining cash balance, cash collected from debtors or the cash sales, and after incurring the expenses, the remaining cash balance is ultimately sent by branch to whom? Head office. Because the branch is completely a dependent branch, whatever the activity is done by the branch is within the control of the head office only. So that's why whatever the cash is procured by the branch during their business activities is ultimately sending to head office, which is cash remitted. You can write by cash remitted. If cash sent to cash, then if cash remitted, by cash remitted. Is it okay, guys? Next. Please consider it, all of you. Sir, if you write like this, then you can derive simply profit or loss derived from that particular branch, and that particular profit or loss you can make it transfer to head office P&L, which is profit or loss of that particular branch, which is nothing but that particular branch profit or loss. So just to head office P&L account, which is nothing but profit or loss. So if it is profit, we are showing this side. For example, if this is a loss by head office P&L, then we are showing this side. Then you may have a question that if you record the entries like this, how you can able to derive this profit or loss, sir? What is the logic behind this pro forma, sir? Okay, there is no technicalities till now you explained regarding the preparation of this pro forma, but how these things are worked out, sir? I'll connect. Please, all of you concentrate here. Sir, in case of incompleted records under statement of affairs method, to know profit or loss of that particular entity related to the particular period, how you started? You started with closing capital, right? Closing capital is nothing but closing assets minus closing liabilities, right? closing balance of assets. Under debit side means minus closing balance of liabilities. Under different one is under debit side, another one is credit side, means that is minus closing balance of assets minus closing balance of liabilities, then you will get closing capital. Do you agree? Next, opening balance of assets minus opening balance of liabilities. This is opening balance of assets, this is opening balance of liabilities, then you will get opening capital. Here is opening capital is there, here is closing capital is there. Now you are comparing closing capital with opening capital. Okay, for closing capital you should need to add drawings, you should need to reduce additional capital, right? Please consider, all of you. Whenever goods are sent by head office to the branch, for head office they can treat it as a additional capital introduced into that branch. Whenever cash sent by head office to the branch, they can treat it as an additional capital. You can treat it as additional capital. Additional capital. Whenever such goods returned by branch to the head office, whenever the cash is remitted by the branch to the head office, then we can call these things as drawings. Then these things we can call it as drawings. Sir, no author or in no book this explanation is available. No author uh, no author discussed this explanation, or no book contains this explanation. This is out of my analytics only I work out. Now please all of you concentrate. Now closing capital, which is the difference of closing assets and closing liabilities, which is the difference of closing assets and closing liabilities, which is closing capital, plus drawings. If both are in the same side means you can use the plus symbol, that is plus drawings. That's why it is also putting under credit side. This is credit side, this is debit side. So closing capital plus drawings, which is under opposite side, right? Minus additional capital, minus opening balance of assets minus opening balance of liabilities, which is opening capital. So closing capital plus drawings minus additional capital minus opening capital, automatically you are getting profit or loss, which is a balancing figure. If it is a profit, the balancing figure is under debit side. If it is a loss, the balancing figure is under the credit side. It should need to be transferred to the head office P&L. In head office P&L, what will happen? Head office will generate their own profit, and apart from the head office profit, the head office is also going to consolidate profit or losses of all the branches under the head office P&L. That means head office P&L, we can call it as a consolidated P&L as well. So their own head office profit or loss as well as all different branches profit or loss itself is consolidated under head office profit and loss account. Then you know the entity total profit or loss. But now here I'm explaining only that particular branch profit or loss, how we are going to work out through Debtors method. Sir, for this, is there are any simple steps can you able to provide, sir? Yes, I already developed certain steps. What are such steps? Step number 1, opening balance of assets. Step number 2, opening balance of liabilities. Step number 3, goods sent. Step number 4, goods returned. Step 5, cash sent. Step 6, cash remitted. Okay, like this I'll put, just a wait. Below I'll put the steps approach. Now I'm discussing the continuation of the Debtors method, steps approach. So steps approach. Step number 1, opening balance of assets and liabilities. Step number 2, closing balance of assets and liabilities. So with that, opening balance of assets and liabilities you reported, closing balance of assets and liabilities also you reported another branch account, which are 2 steps. Come to step 3, goods sent. Step 4, cash sent. goods sent, cash sent. Step 5, goods returned. Step 6, cash remitted. Cash remitted. Then after completion of 6 steps, then the balancing figure we can derive it as a profit or loss of that particular branch. You may surprise that without knowing any single expense and single income of that particular branch, how we can able to ascertain this profit or loss, sir. The logic I already told you. In case of incomplete records under statement of affairs method, without knowing the income and expenditure of that particular entity, how you can able to derive the profit or loss of that particular entity for that particular period. The same logic you can apply here. That is closing capital plus drawings minus additional capital minus opening capital. Then automatically you are getting profit or loss of that particular entity, of that particular branch. Hope you understand, guys. Now still the discussion is not yet over. When this will work out, when this will work out, if goods are sent by head office to the branch at cost price, if the same goods are sent by head office to the branch at invoice price, then this stock is at the rate of invoice price at that particular point of time. Then the closing stock is also at the rate of invoice price. Sir, if this stock is at invoice price, then we cannot able to ascertain profit or loss. Now the unrealized profit lying in the closing stock, this closing stock is there now, which is unrealized profit now, it should be eliminated. Tell me, guys, you already saw in case of departmental accounts as well, unrealized profit lying in the closing stock, we are eliminated as a stock reserve or not. To show this stock at a cost price, I need to eliminate the profit under that stock in the opposite direction. That means now the profit included in this stock, you can eliminate, or you can write it as a stock reserve. You can write it as a stock reserve this side. That is to stock reserve. To stock reserve. Now the profit included under the opening stock, you can record this side by stock reserve. When if the goods are sent by head office to the branch at a invoice price, then only stock reserve concept is applicable. Otherwise stock reserve concept doesn't applicable. And one more thing, at that particular point of time, goods sent by head office to the branch, this is also at the rate of invoice price. The goods returned by the branch to head office, this is also at the rate of invoice price. Now the net goods sent to the branch, certain loading is included, right? The profit included under net goods sent to branch is also you should need to be removed. That's why apart from this, the stock reserve, you should also record by loading included in net goods sent to branch, also you should need to remove. Now the formalities what you made, the formalities you made, this stock reserve, that is closing stock reserve included in closing stock reserve included in opening stock, you eliminated as an unrealized profit lying as a closing stock, and the profit included under net goods sent to branch also you removed. Now the prices are showing at cost, the original cost, then you can derive profit or loss. When this concept is applicable, if goods are sent by head office to the branch at invoice price, or if goods are sent by head office to the branch at cost price, then no need to think about the stock reserve and loading included in net GSB. Now the 6 steps is more than enough. The 6 steps are more than enough. But if the goods are sent by head office to the branch, then certain formalities you should need to make. When this step number 7 is applicable, if goods are sent at the rate of invoice price, then only this step number 7 will be applicable. What is that? That is known as formalities. What is that formality? What are those formalities? Those formalities are total 2 formalities. One is stock reserve, you should need to work out stock reserve both on opening and closing stocks. And another one, Loading included in loading included in net goods sent to branch, which is in net GSB. What is the meaning of net goods sent to branch? Goods sent to branch minus goods returned by branch to head office is known as net goods sent to branch. Out of that net GSP, how much profit is included, you should need to eliminate. Now all the prices are looking the cost price as like how the goods are sent by head office to the branch at cost price. Now the pro forma is changed in that manner. Then you can simply find out the head office profit or loss. So the conclusions are very much simple. If the goods are sent by head office to the branch at cost price, only simple 6-step approach is over. Opening balance of assets and liabilities, closing balance of assets and liabilities, goods sent, cash sent, goods returned, cash remitted. Then automatically you can simply find out profit or loss. That profit or loss you can make it transfer to head office P&L. No, but if the goods are sent by head office to the branch at invoice price, apart from all these 6 steps, you need to add one additional step, which is on closing stock, you should need to eliminate unrealized profit lying in closing stock as a stock reserve, because at that particular point of time, stock is showing at the rate of invoice price. That is closing stock. In the same way, opening stock is also showing at invoice price. You need to reduce that unrealized profit lying in the which is the opening stock is for the last year, which is closing stock. Now for the current year, which is opening stock. That's why it should need to be reported separately as a buy stock reserve. And the profit which is included in the goods sent by head office to the branch is also should need to be eliminated as loading included in net GSB. Then all the figures are at cost price. Then simply you can derive the head office profit or loss. That's it, guys, which is with respect to a debtors method, guys. If like this, if I tell n number of times, you may not get the confidence. It is better to pick a one problem directly on the debtors method. Let me explain the same thing at this instance. Then only I'll go to the next method. Then we can simply appreciate the other methods. Okay, I'll close this session after explaining the problem, which is problem number 1. The same problem we are going to made it under 3 different methods for better understanding. First, let me complete the problem number 1 under debtors method. Okay, please all of you come to my material. Still now I'm not touching anything, I know that, but still I'm directly going to the problem number 1. We will explain each and everything at later point of time by reading the sentences which are given in the material as well. First, all of you please come down to material problem number 1. Concentrate here. The Bombay traders invoiced goods to its Delhi branch account. So the branch is located at Delhi. Head office is located at Bombay. That is the information they are providing. Head office paid all the branch expenses from its bank account. That means branch will not incur any of their expenses. All the branch expenses are paid by head office itself. Okay. Except petty cash expenses. Petty cash, small expenses are there. Any of the petty cash expenses which are met by the branch. Simply petty cash expenses paid by the branch itself, but the remaining all the branch expenses are paid by head office itself. All the cash collected by the branch was banked on the same day to the credit of the head office. So this term itself is clearly and indirectly telling to us the branch is a dependent branch. So whatever the sales they made, either cash sales or cash collected from the debtors, they ultimately make it presented to the head office on the same day. The following is a summary of the transactions entered into the branch during the year ended December 31st, 2012. What is such information? Opening stock given, opening debtors, opening petty cash, goods sent from head office, which is nothing but goods sent from head office means which are goods sent to head office, goods sent to branch, which is GSB, goods sent to branch. Goods returned to head office, the information is giving in branch point of view, but we are providing the accounting treatment in head office books. That's why for head office, which is treated as goods returned from branch, goods returned from branch. Okay, cash sales given, credit sales given, allowances to customers, discount to customers, bad debt, goods returned by customers, salaries and wages, rent and rates, sundry expenses, cash received from sundry debtors, closing stock, closing debtors, closing petty cash. Prepare branch account under debtors method. The same problem you need to resolve under stock and debtors method. B is related to stock and debtors method. We not yet discussed any single point. And the C is related to final accounts method. This is final accounts method. To prove the results as disclosed by the branch account, we need to prove the result. Whatever the method we can choose, the result should be same. Okay. Now, let me explain this problem only in debtors method perspective first. Sir, in debtors method, to ascertain profit or loss of Delhi branch, we need to follow 6-step approach, not the 7-step approach, because nowhere it is mentioned that goods are sent at invoice price. If nothing is mentioned, we can assume that goods are sent at cost price. Now, all of you, please come to my OneNote below. Just a second. Yeah. So problem number 1 under debtors method, right? In bracket also you can mention that, because the same problem we are doing thrice under different methods. Tell me guys, all of you please participate. In case of debtors method, to ascertain profit or loss of that particular branch, which account we need to maintain? Branch account, right? So you can open Delhi branch account. The branch account name is Delhi branch account. Apply the 5-step approach, sorry, 6-step approach. All of you quickly. What is that 6-step approach is all together? Opening balance of assets, which is opening balance of assets. It is clearly given such information in the problem itself. Stock 7,000 given. Okay. Then debtors 12,600. Next, petty cash 200. That's it. These are opening balance of assets. Is there any opening liabilities given? Nothing is given. You can ignore. Coming to the opening balance of assets and liabilities over. Coming to the step number 2, closing balance of assets and liabilities. So there are only assets are there. There are no closing liabilities as well. So you can write here, which are closing balance of assets. Assets to balance brought down for opening balance, for closing balance by balance carried down. Am I right? You know that facts, right? Asset should be shown under debit balance and liability should be shown as a credit balance. So closing balance of assets, stock given at 6,500. Debtors given at 9,800. Next, petty cash given at 100. In case of debtors method, no need to think about each and every expense and each and every income. You can simply follow that 6-step approach. One more thing, in case of debtors method, head office is only going to record transactions entered in between head office and branch only. It will not going to record any transactions occurred in between branch and outsider. That's why in between head office and branch, what are the transactions occurred? That is step number 3, goods sent to the branch. How much, sir? Goods sent to the branch, which is goods sent from head office. In branch point of view, which is goods sent from head office, but in head office point of view, which is goods sent to the branch. So that's why we need to record this as 2 GSB. 2 goods sent to branch. Given how much, guys? 26,000, which is given at 26,000. Next, goods returned by branch. You should need to write under credit side, which are goods returned by GSB. Goods sent, goods returned by GSB. How much? Which is 1,000. Next, cash sent. Sir, how much cash you sent to the branch, sir? How much cash you sent to the branch? Is there any information provided? Sir, till now, step number 1, opening balance of assets and liabilities, closing balance of assets and liabilities, goods sent, goods returned, over. Cash sent, cash remitted, which we should need to require. Cash sent and cash remitted, we should need to require. Step number 5, step number 4, step number 6 need to require. Cash sent and cash remitted. Sir, how much cash sent by head office to the branch, sir? Now it is clearly given that head office paid all the branch expenses from its bank account itself. That means even though head office directly met those branch expenses, means this cash is nothing but sent to the branch only. Maybe not sending to the branch, but for which purpose they are using? For the purpose of making payment of branch expenses only. That is nothing but ultimately these cash expenses incurred by the head office for the purpose of branch only, which I can treat it as cash sent to the branch only. Do you understand, all of you? So that's why what are all the different expenses incurred by the branch? Such all expenses in the form of cash is ultimately met by the head office. Such expenses total amount we can simply make it term it as cash sent by head office to the branch only. Now if you observe, allowances, which is a non-cash expense, discount is a non-cash expense, bad debt is a non-cash expense, salaries and wages is a cash expense, rent and rates cash expense, sundry expenses cash expense. To incur all these things, who ultimately met who ultimately met all these expenses? Head office only. But these expenses are related to whom? Branch only. That's why this amount literally we can call it as cash sent by head office to the branch. Even though not really sent this cash by head office to the branch, this cash is ultimately utilized for the purpose of payment of the branch expenses. Or we can assume in this way, if head office sent that cash to the branch, then branch can able to meet such expenses. Am I right or wrong? How much that amount? 6,200 plus 1,200 plus 800. So total, which is 8,200. So this step, 2 cash sent or simply 2 cash or 2 cash sent as your wish. How much? 8,200. Now in the same way, you should need to work out by cash remitted. Cash remitted by whom? Cash remitted by branch to head office. How much, sir? Cash, anywhere it is given, can you please check, all of you? How much cash is ultimately remitted by branch to the head office? It is clearly given that, sir, branch, all the cash collected by the branch was banked on the same day to the credit of the head office. Now, if you check, how much cash availability is there with the branch, sir? How much cash availability is there with the branch, sir? Now, branch have a cash sales of 17,500. Branch have a credit sales of 28,400. That means the sales itself is 17,500 cash sales. It was already there in the form of cash. Credit sales is there in the form of 28,400. Am I right? Now, out of this credit sales, how much cash actually they are collected from the debtors? That point is also given, which is 28,500 directly. If this point is not given, we should need to derive how much cash is collected from these debtors. Because once the credit sales occurred, then debtors are automatically occurred. Just let us assume here directly given cash received from sundry debtors is 28,500. Therefore, the total cash availability with the branch before sending that amount to the head office is 17,500 plus 28,500. We can simply tell. But this information is not giving, then how I can derive cash collected from debtors, sir? Please, all of you concentrate. Now I am telling you, if this information is not giving, how to derive, I am telling you. Opening debtors, 12,600. Opening in debtors 12,600 balance is there. Current year, how much credit sales you made? 28,400. That means if you made in the current year sales, then the debtors balance is increased. Debtors to sales, na. This is the total debtors balance, out of which you are allowed as a discount to the customers 1,400, allowances to the customers 200. This amount you may not recoverable from the debtors. The total minus 200 minus 1,400, you are unable to recover amount from the debtors. And one more thing, 600 became bad debt. That amount also you are unable to recover. And goods returned by the customers means debtors balance need to be decreased. At the time of sales, the entry is debtors to sales. At the time of sales returns, the entry is sales returns to debtors. That's why sales returns also you need to decrease, minus 500. If you do this, this figure is as equal to 28,500 only. If you want, you can cross check that. 12,600 plus 28,400 minus 200 minus 1,400 minus 600 minus 500. I got 38,300. This figure is 38,300. Please concentrate. Just a moment. Which is 38,300. Which is the balance of debtors. But if you check the real closing balance of the debtors, which is 9,800. Now 38,300 minus 9,800. Then you will get the cash collected from debtors. Sir, the closing I got is 38,300, but the actual given closing debtors is 9,800. The difference is how much? 38,300 minus 9,800, which is 28,500, which is cash collected from the debtors, which is directly given. No need to work out, but still I explained in this problem. That means the total cash balance available with the branch before sending such cash to the head office is cash sales of 17,500 plus cash collected from the debtors 28,500. The total is how much, guys? 17,500 plus 28,500. The total is 46,000. You can record which is 46,000. In bracket, you can write those figures clearly. 17,500 cash sales and cash collected from debtors is 28,500, which is the final step. Which is the final step? If you check step number 6, cash remitted. Sir, then what about all these expenses and income, sir? In case of debtors method, we should not record any transactions occurred in between branch and outsider. If you check allowances to the customer, discount to the customer, bad debts, all those are transactions entered in between branch and outsider. Salaries and wages, branch and employee. Rent and rates, branch and owner. Sundry expenses, branch and the other party. Such expenses we never recorded, we never taken into consideration in case of debtors method. So that's why only the 6 steps only I make it report here. Now, if you can close this Delhi branch account, then you can easily find out the profit or loss of that particular branch. Can you please all of you calculate this, guys, for me? Under credit side, 1,000 plus 46,000 plus the closing assets 6,500 plus 9,800 plus 100, which is equal to 63,400 this side. And if it is also 63,400, then you will get the difference. The difference you can make it transfer to head office P&L in bracket, which is profit situation. So opening 7,000 plus 12,600 plus 200 plus 26,000 plus 8,200 minus 63,400. So the difference is 9,400, guys. So profit or loss derived from Delhi branch, we get it as a 9,400 through that simple 6-step approach. Sir, here I'm not simply put the format. I already told the background story of that format, why we are putting that format like that. It was linked through incomplete records chapter under statement of affairs method. Without knowing any revenue income and revenue expenditure, we can able to ascertain profit or loss. In the same manner, I developed such 6-step approach. When the goods are sent by head office to branch at cost, if the same goods are sent by head office to the branch, then we need to follow the 7-step approach. The additional formalities, opening stock reserve, closing stock reserve, as well as loading included net JSP also included. Then automatically you can simply derive profit or loss from that particular branch. That's it, guys. This is with respect to the debtors method as well as problem based on debtors method. So in the next session, we are going to take up stock and debtors method as well as final accounts method. Stock and debtors method is a little bit cumbersome, and I'll take up simultaneously the problem number 1 once that particular method got completed. Until bye, have a nice day.